Yeah, welcome back. We are still in accounting November 2022, paper 2. This is paper 2, and we are now doing question 2. Question 2. And question 2 is based on manufacturing, cost accounting. It's based on cost accounting. Question 2 is based on cost accounting, manufacturing. The most important point that you need to keep in mind is that when you go to a manufacturing industry, you will find that there will be 3 departments. There are 3 departments there. 3 important departments. The first one is the administration department. That's the first department. The first department is the administration department, where you will find office workers, people who are working in the office. And then the second department will be your factory. Your factory. And that is where production takes place, in the factory. Your factory, that is where your production takes place. That's where production takes place. That is where production takes place. And then the third department will be your selling and distribution department. Selling and distribution. The third department will be your selling and distribution department. So now, our question 2 is requiring that we do the production cost statement. The first thing that is required there is the production cost statement. And then the production cost statement will be under this department, which is the factory department. And we must understand, it is important that we always emphasize that under the factory department, there will be 3 costs involved under the factory department where production takes place. There will be 3 costs involved again. The first cost will be your direct material cost. The first cost will be your direct material or your raw material cost. Here we are referring to the materials that are required for the production process to take place. But these materials also form part of the finished product. How do we? Because we have the direct material cost and also the indirect material cost. But for now, we are talking about the direct material cost, the materials that are used in the production process and which also form part of the finished product. We also have the second cost, most important cost here when we are doing production, which is the direct labor cost. Here we are referring to the money that is paid to the workers who are actually doing the production. This is direct labor cost. And then the third cost will be your factory overheads. Your third cost will be your factory overheads. Your factory overheads, that is where, under factory overheads, that is where you will have your indirect materials. You will have your indirect materials here. That is where you will have your indirect labor. And all other factory expenses. And other factory expenses. So you have your direct material cost, which is a standalone note. You have your direct labor cost. So maybe one will have a question, what will be the difference between the direct materials and the indirect materials? So the direct materials are the materials which are used in the production process, and they also form part of the finished products. But the indirect materials, these are the materials which are necessary for production to take place, but they do not form part of the finished product. Like for example, the production that takes place in our homes will be like when people are producing fat cookies. So like if you are producing the fat cookies, your direct materials will be your flours, will be your cooking oil, will be your salt, will be your yeast. All that will be your direct material because it will form part of the finished product. But you cannot be able to do that production using dirty pots, or maybe do that production in a dirty environment. You will need the cleaning materials. So the cleaning materials are necessary for the production to take place, but they do not form part of the finished product. Therefore, the cleaning materials will be regarded as indirect materials, and those will go under what? Under factory overheads. Same thing applies with the direct labor cost. The direct labor cost, this is the money paid to the workers who are actually doing the production. But when it comes to the indirect labor, we are referring to people working in the factory, but who are not doing production. Like, for example, the factory foreman is there as a supervisor, but is not actually doing the production. Like the factory cleaner, that will be regarded as indirect labor. But those workers who are actually doing the production, when they are paid, we said that is direct labor cost. And you have other factory expenses like water and electricity, insurance of the factory, all other factory expenses. So the indirect materials and indirect labor and all other factory expenses will go under factory overheads. And then the direct material cost is a standalone note. The direct labor cost is a standalone note. So hence we are saying we have three costs. We have the direct material cost, the direct labor cost, and we have factory overheads. And if the combination of the three costs will then give you your total cost of production. So let us then look at this production cost statement for the year ended 28 February. The production cost statement is the structure of the production cost statement, and it does not change. It does not change. When you are writing an exam, you should always know that you will have your direct material cost plus your direct labor cost. And if these two costs are added together, they will give you a total, and that total is called the prime cost. This is the primary cost. When you are adding material cost plus labor cost, then the total is the prime cost. When you add your total factory overhead cost, that is where you get to your total manufacturing cost. That is the total cost of production. And then you add work in progress at the beginning. That is the work that we did not finish in the previous accounting period. You add the amount of that work, and then you subtract the work in process at the end. You then get to the final answer, which is the total cost of product, or the cost of production of finished goods. That's the cost. I think the correct term that we should be using there is the cost, total cost of production of finished goods. Total cost of production of finished goods. So let us then go to our question paper. Question paper, we have question 2, cost accounting, manufacturing, and it's 50 marks, 40 minutes. The business produces formal shirts. The financial year ended 28 February 2021. You are required, prepare the production cost statement. And the information that we are having here, information A is the stock on hand. Information B is the bookkeeper calculated the cost below. Some errors were made. The first cost is direct material cost, and the direct material cost given here in the question paper is 1,575,000. Direct material cost is 1,575,000. Direct material cost is 1,575,000. And there are some errors and omissions here. The first error in information C, we are told that the payment to quick deliveries of 75,000 for carriage on raw materials was incorrectly allocated to the selling and distribution cost. So this was the payment to quick deliveries for 75,000 carriage on raw materials. So this one is for the direct material cost. So we need to add 75,000 here. Remember, in accounting, the transport cost also forms part of the value of stock. So if we buy raw materials to the value of 20,000, and then we transport those materials by 5,000 rands, so the total value of the materials will then be 25,000. So the cost will be 25,000. So transport cost or carriage on purchases forms part of the value of stock. So we bought materials to the value of 1,575,000 and the transportation cost was 75,000 and they left it in error. They did not add that 75,000. So let us then add it. We have 1,575,000 price of the materials plus transportation cost, which is carriage on purchases of 75,000. So the total material cost is 1,650,000. Total material cost is 1,650,000. Right? And then the direct labor cost is not given here. So we are given just a question mark next to the direct labor cost. The amount for the direct labor cost was not given. But if you look at information D, the prime cost is given here. We are told that the prime cost, after all adjustments have been considered, the prime cost is 2,550,000. The prime cost is 2,550,000. So they've given us the prime cost, but they decided not to give us the direct labor cost. So which is then easy for us to get the direct labor cost if we have the prime cost, because we know that direct material cost plus direct labor cost will give you your prime cost. So to get the direct labor cost, you just have to take your prime cost, which is 2,550,000, 2,550,000, and then you just subtract the direct material cost of 1,650,000. 1,650,000. So that is 900,000. So the direct labor cost is 900,000. Because we know that if we add the two amounts, if you take the 900,000 and you add to 1,650,000, 1,650,000, you should get 2,550,000. So I think here they wanted to know if the student is aware that the prime cost is made up of direct material cost and direct labor. That is why they did not give you the direct labor cost amount. They just gave you the material cost and the prime cost. So if you know that the material cost plus labor cost will give you the prime cost, so it's easy. You just take your prime cost, you subtract the material cost to get the direct labor cost of 900,000. Right. Then now we want to calculate factory overhead cost. Let's see what is given here. The factory overhead cost is given at 518,800. Factory overhead cost is 518,800. That's the amount given before considering the adjustments which are here. So let's look at the adjustment. There are the first adjustment here, which is under information C bullet 2. It says the entire insurance amount of 25,200 was transferred to the administration cost account. 2/3 of this expense should be allocated to the factory. So the entire amount of 25,200 was transferred to administration cost, whereas 2/3 of that amount should have been allocated to the factory. So the 25,200, it said here 2/3 of this amount should be allocated to the factory. It should be part of factory overheads, because insurance is just other factory expenses, so it will be part of factory overheads. So 25,200, 2/3 of this amount should have been allocated to the factory. So that's 25,200 multiplied by 2/3. So it's 16,800. So 16,800. Factory overhead cost, we have another factory expense, which is insurance, and the amount for factory insurance is 16,800. Remember, that is why I emphasize that here we are dealing, in the manufacturing industry, we are dealing with 3 departments. So if we are focusing on the production cost statement, so all expenses that should be here, it should be expenses that are relating to the factory only. Even if it is for water and electricity. If the company paid 1 million for water and electricity, we need to know the exact amount that that if it is 1 million, but out of that 1 million, we need to know the exact amount for water and electricity for the factory. So here, this 25,200 is the insurance cost for the whole factory, which is covering all departments, admin, factory, and selling and distribution. So, but we wanted to know the cost for the factory insurance, and this transaction is therefore giving us a direction by saying that 2/3 of this amount, 2/3 of this insurance amount should be allocated to the factory. So 25,200 multiplied by 2/3, 2/3. So the factory insurance is 16,800 plus. The factory overhead cost account included an amount of 117,600 for water and electricity. But the bookkeeper had incorrectly allocated this expense to factory administration and selling and distribution in the ratio 6:3:1, but the correct ratio is 5:4:1. So the factory overhead cost account included an amount of 117,600. So the first thing, because we are told that this amount is incorrect, we need to subtract it from here, because this transaction is telling us that this amount was included. So therefore it will be, the first correct thing to do is to subtract this 117,600. So let's subtract the 117,600, and then we need to work out the correct amount on the side. We are told that the 117,600 for water, the bookkeeper had incorrectly allocated this expense to the factory, admin and selling it in the ratio 6. And the correct ratio is 5. Because it's 6:3:1 and 5:4:1. So we calculated, because 6 is representing the factory, 3 is representing admin, and 1 selling and distribution. But the correct ratio should have been 5. Representing the factory, and 4 representing the admin, and 1 representing the selling and distribution. So it means this 117,600 was calculated using 6, and we want 5. So let's multiply it with 5, because 5 is the correct amount, and divide it by 6, because it was calculated using 6. So now you have your 117,600 multiplied by 5/6. I think this money, because it was calculated using 6, it will go down a little bit. So let's say 117,600 multiplied by 5/6. That's 98,000. So the correct amount is 98,000. So we are now multiplying with the correct amount, and we are dividing by 6, because this 117,600 is represented by this 6. So the correct amount, so we are taking out the 117,600, we are now adding the correct amount, which is 98,000. So now the error has been corrected. So let's then calculate the correct total for factory overhead cost. The amount which was given was 518,800 plus 16,800. That's plus 16,800 minus 117,600 plus 98,000. Plus 98,000. 117,600 plus 98,000 equals to 516,000. Factory overhead cost, the correct total now is 516,000. 518,800 plus 16,800 minus 117,600 plus 19,000. 98,000. Right. Then prime cost plus this 516,000. So 2,550,000. 2,550,000 plus 516,000 equals to 3,066,000. 3,066,000. It's very important to ensure that you use your calculator correctly, so that you do not calculate incorrect. You give incorrect total. 580, let me just verify these amounts. minus 117,600 plus 98,000 plus 2,550,000. Yes, the total manufacturing cost is 3,066,000. Work in progress at the beginning, this amount is given. Work in progress at the beginning is 230,000. 230,000, 1st March 2020. Work in progress at the beginning is 230,000. So we are adding this to this amount. This is plus 230,000. It is giving 3,296,000. 3,296,000. 3,296,000. Minus work in progress at the end to get to the final answer. Minus work in progress at the end. Work in progress at the end was not given. There is a question mark there. If work in progress was given, we would just subtract and get to the final answer, but it was not given. So let us check our transactions. Maybe there is something which will give us a directive as to what to do, because this amount was not given. So if you look at information E, the final answer is given there. We are told that 7,600 shirts were produced at a unit cost of 420 each. 7,600 t-shirts. 7,600 t-shirts were produced at a unit cost of 420 each. 7,600 multiplied by 420. 7,600 multiplied by 420. 7,600 multiplied by 420 equals to 3,192,000. 3,192,000, which is the final answer. And if you can just reverse to this amount, we can be able to get the amount that is supposed to be the work in progress at the end. It will be 3,192,000 minus 3,296,000. And the answer will be in brackets, which is 104,000. So 104,000 is here. Our work in progress at the end is 104,000. And you can prove this by taking this 3,296,000 minus 104,000. Then the final answer will be 3,192,000. So which is our total cost of production of finished goods, which is 7,600 multiplied by 420 gives you a total of 3,192,000. So the production cost statement is simple and straightforward. What is important with the production cost statement is for you to understand that our main focus is on the factory department. Whatever amount that does not relate to the factory, which relates to other departments like admin and selling and distribution, those amounts are not included here. Here, when we are dealing with production, we are only focusing on the expenses which are relating to the factory, so that we are able to calculate the correct production cost at the end here. Right. So we are done with the production cost statement. We are proceeding to 2.1.2. 2.1.2. Calculate the gross profit end on the sale of shirts, 5 marks. We want to calculate the gross profit end on the sale of shirts. Gross profit end on the sale of shirts, that is 2.1.2. 2.1.2, the gross profit. How are you going to calculate the gross profit? It will be sales minus cost of sales. Sales minus cost of sales equals to gross profit. The gross profit end on the sale of shirts. Right. The sales amount is here in information E. It is 4,860,000. The sales amount is given. It is 4,860,000. 4,860,000. But cost of sales is not given. Cost of sales amount is not given. What is it that is given? We have our finished goods stock at the beginning. The stock that was ready to be sold, the cost of the stock that was ready to be sold at the beginning of the year was 342,000. This is the stock that was available for sale at the beginning of the year, plus the stock that we produced and finished in the current year, which is 3,192,000. This is the stock that we produced and finished in the current year, right? Minus the stock that is left at the end. The stock of finished goods left at the end is 400 shirts. And we know that each shirt cost 420. So the stock that is left is 400 shirts. So it will be 400 shirts, and each shirt cost 420. It will be 400 multiplied by 420. So the value of the closing stock here of finished goods is 168,000. So our sales, it will be 4,860,000 minus our cost of sales. Let's calculate our cost of sales. The stock that was available for sale was valued at 342,000. We produced another goods and we were able to finish them to the value of 3,192,000, which tells us that the stock that was available to be sold valued at 3,534,000, but we did not manage to sell all this stock because we have this 168,000 left, minus 168,000 left. So therefore, our cost of sales is 3,366,000. And then gross profit, 3,366,000. So now you have your sales of 4,860,000. Sales of 4,860,000 minus cost of sales of 3,366,000. 3,366,000. 4,860,000 minus 3,366,000. And then our gross profit will be 1,494,000. Gross profit is 1,494,000. Right. So gross profit, it is sales minus cost of sales. And still on 2.1.2, they want us to calculate the markup percentage. They want us to calculate the markup percentage. Markup percentage. And the formula of calculating the markup percentage, it is gross profit over cost of sales times 100. Gross profit over cost of sales times 100. That is how we calculate the markup percentage. So we do have our gross profit, and our gross profit is 1,494,000. Our gross profit is 1,494,000. 1,494,000, and our cost of sales is 3,366,000 multiplied by 100. Gross profit over cost of sales times 100. Right. 1,494,000. 1,494,000 over 3,366,000. 3,366,000 times 100 multiplied by 100 is 44.38. So that's 44.4%. Our markup percentage is 44.4% or 44.3. So if it is 44.38, so then if you round it off, it will be 44.4%. So our markup percentage is 44.4%, right, which brings us to the end of 2.1. And then if you will open our question papers on the following page. The following page is page 7, but we are still on cost accounting. And we have 2.2 there, question 2.2 for leather manufacturers. .2 is for leather manufacturers. Leather manufacturers. Right, which is on page 7 of the question paper. Right, leather manufacturers is owned by Tello Andrews, and they produce leather purses and leather jackets. So this business is producing leather purses and leather jackets. The financial year ends on 28 or 29 February each year. Required for the purses. Calculate the break-even point for the purses for the year ended 28 February 2021, 4 marks. So we are starting with the purses. We want to calculate 2.2.1. 2.2.1. We want to calculate the break-even point. Break-even point. And it is abbreviated BEP. The break-even point is the point at which neither profit nor loss is made. So it means if like for example, if you are in a production process, like I made earlier on, I made an example of amagwinya or fed cookies. If you are in the production process, you should be able to tell how many fed cookies must be made and sold before the business start making a profit. If you are carrying a bucket which has got 300 inside the bucket and you are going to sell, you should know exactly how many in that bucket will cover your total cost of production. So you should know that out of this 300 that I'm carrying, if I can be able to sell 160, I would have covered all my cost. So the 161 one and the 162, 163 will then be my profit. So if 160 will be the number that will be covering all your total production cost, then 160 will be regarded as the break-even point. So the break-even point is the point at which neither profit nor loss is made. So there is a formula of calculating break-even point. There is a formula of calculating break-even point. It says total fixed cost divided by selling price per unit. Selling price per unit minus variable cost per unit. Total fixed cost divided by selling price per unit minus variable cost per unit. So we are calculating this break-even point for 2021 and we are calculating it for the purses. So let's go to the information for purses and look for the total fixed cost. The total fixed costs are given, we are given the amount there. Total fixed cost is given and it is 936,000. Total fixed cost is 936,000 over selling price per unit. Selling price per unit is given for 2021, it is 295 Rand minus variable cost per unit. And the total variable cost is also given for 2021, it is 255. 295 minus 255 is 40. So you have your 936,000. You have your 936,000 divided by 40. Because 295 minus 255 is 40. 936,000 divided by 40. So our break-even point is 23,400. Break-even point is 23,400. This business needs to sell 23,400 or more. Because if they can sell less than 23,400, it will then indicate that this business is running at a loss. Because the break-even point, is the minimum number that is required. Minimum number that must be sold. Because if this business can sell exactly 23,400 pieces, it will mean they have neither made profit nor loss, because it will just be an exact amount that they have spent on the production of these pieces. So that is why we need to produce and sell more than 23,400 for us to be making a profit. So this then leads us to the following question. After we have calculated the break-even point, we now know that we cannot afford to sell less than 23,400, because that will be an indication that the business is running at a loss. So the following question, which is 2.2.2, is now asking us to comment on the level of production achieved and the break-even point for pieces for 2021. Quote figures. Quote figures. That is 2.2.2. We are now required to comment. Comment on the level of production achieved. If you look at the number of units, it is given there for pieces for 2021. The number of units produced and sold is 24,000. And we need to make a comment. We know that the minimum number is 23,400, but this business has managed to produce and sell 24,000. So if then we are required to comment, looking at the level of production and the break-even point, we can therefore safely say that the number of units produced, is 600 more than the break-even point. It is 600 more than the break-even point, which indicates that the business has made profit. The number of units produced is 600. Where am I getting the 600? I am comparing the total number of units produced, which is 24,000. That is 24,000, the total number of units produced, and the break-even point is 23,400. So 24,000 minus 23,400 equals to 600. So we were fortunate that the number of units produced and sold is more than the break-even point by 600 units, which therefore indicates that the business has made a profit. 2.2.3, apart from inflation and wage increases, give two other possible reasons for the increase in the direct labor cost per unit for pieces. So apart from, this is 2.2.3. 2.2.3. Apart from the inflation and wage increases, give two other possible reasons for the increase in the direct labor cost per unit for pieces. If you look at the direct labor cost per unit for pieces, 2020 it was 105 per unit labor cost. And 2021 is 135. And we are asked to think, this one is just a question that requires your general reasoning. Because we are asked to think of two possible reasons other than inflation or wage increases. What is it that can increase the cost when the workers' wages have not been increased, but the cost has increased here? What would be the possible reasons for that? Maybe the first one will be that there was more overtime. This can increase labor cost when there is more overtime, apart from increasing the wages of the employees. But if you give more overtime, the labor cost per unit will then increase. If there are also some disturbances during production, and therefore workers had to work again extra hours, like for example, if there is load shedding, it might also be another reason. Load shedding might also be another reason for this labor cost, because if there was disturbance in the production process, load shedding during normal time, and therefore had to work extra hours. But remember, in accounting, we are not marking the language. Even if the learner has just written load shedding, we would understand as the accounting markers that what the learner means there. So there is no need to write the full sentence, but we are just explaining it to you that maybe in load shedding, how can this have a contribution to the price increasing? Right, we have 2.2.4. 2.2.4. 2.2.4, give two reasons for the decrease in the direct material cost per unit for persons. Give two other possible reasons for the decrease in the direct material cost per unit for the persons. If you look at the persons, the material cost per unit last year was, in the previous year was 125, and it has gone down to 100. What is it that can decrease the material cost? These are also the questions that requires just your general reasoning. What is it that can decrease the price of the material cost? Maybe there was a change. Changed to a cheaper supplier. Changed to a cheaper supplier. This will decrease the material cost. If the business has decided to change to a cheaper supplier, then the material cost will go down. Another possible reason for the decrease in the material cost is that if there is less wastage of materials. That is why when we are in the production, you must encourage your workers to be as efficient as possible. If they are not efficient, then it is important that they need to be taken to training. We need to organize workshops for them so that you improve efficiency. So if there is less wastage of material, the cost will go down. If you can imagine in the example that I made, when we are baking cakes and people are wasting flour, they prepare it and then suddenly they discover that they added too much sugar and then they throw it away, they put another flour. So if people are wasting, then the material cost will go high. But if they are efficient, there is less wastage. That will be a result of what we see now when the material cost is now going down. We might have changed to a cheaper supplier or there is less wastage. And then this brings us to the second, which is the last section of jackets now. The second section here in question 2, which is the last section of jackets, and we are in 2.2.5. The second section of jackets, 2.2.5. Although Taylor was aware that importing leather for the jackets, would increase the direct material cost per unit, he thought that this would improve the quality of the jackets. So now Taylor was considering importing leather, but he was aware that it will increase the labor cost. Explain why the direct material cost per unit for jackets would probably increase if raw materials were imported. State 2 points. If raw materials were, explain why the direct material cost per unit for jackets would probably increase if the raw materials were imported. There is a lot. Transportation cost. If you are now buying from another country, the material cost will increase because these materials will have to be transported from that country to where we are. So therefore, transport cost will also increase the material cost. The second, you have your import duties. If you are buying from other countries, there are some additional charges, additional costs, which are also added in those raw materials, and we call that import duties. They are added because you are buying from other countries. So there are import duties which are levied on those items which are purchased from other countries. So therefore, the transport cost will increase the material cost, and even the import duties will also increase the material cost. provide figures. That is still 2.2.5. We are then asked to provide figures to prove that Taylor was correct about the effect of this decision would have on the cost of jackets. Taylor was saying that if we are importing leather, the material cost will be high. And then let us then provide figures. Let's go to the material cost. Material cost was 180 last year, and now the material cost is 360. Direct material cost per unit. Direct material cost per unit increased from 180 to 360. 100% increase. This is 100% increase. So Taylor was correct that if this business decides to buy leather from other countries, the direct material cost will increase. So this is proved by these figures now that last year the material cost per unit was 180 and now the material cost is now 360, which is 100% increase. Right, 2.2.6. 2.2.6. Calculate the percentage increase in the selling price of jackets. The percentage increase in the selling price of jackets. Right? Their jackets are now sold for 1,170. Jackets are now sold for 1,170. And then in the previous years, they were sold for 780. For 780. Let's start by, before we can even calculate the percentage increase, let's calculate the increase. How much is the increase? 1,170 minus 780. So there is an increase of 390. 390 increase. So the percentage increase will then be 390 increase over the price. The price was 780. So 390 over 780 multiplied by 100, you will get the percentage increase. 390 over the initial price, which was 780. So this 390 was added on top of 780 to get 1,170. So we want to know what percentage is 390. What percentage for 708? So that's 390 over 780. 390 over 780 times 100. So the percentage increase in the selling price was 50%. Percentage increase is 50%. So the selling price of jackets, now that we are importing leather from other countries, the material cost has increased per unit by 100%, and even the selling price has also increased by 50%. The percentage increase is 50%. And now we are asked in 2.2.7, 2.2.7, you can see that the first question, that all these questions are leading to other questions, because if you look at 2.2.7 now, they want us to explain the impact of the increase in the selling price of jackets on the sales and profit, quote figures or calculation. The impacts on the sales and profit. If you look at the number of units sold in 2020, it was 6,350, and 2021 now it is 3,600. Number of units, sales dropped. Sales dropped from 6,350 to sales dropped from 6,350 to 3,631 to 3,631. So sales dropped from 6,350 to 3,631. And even when you look at in terms of profit, the number of units produced and sold is 3,631, but the break-even point is 3,750. Let's calculate the difference. We needed 3,750 units to break even. but we have only sold 3,600. We have sold less than the break-even point. Let's calculate 3,750 break-even point, because this is the minimum number of units that must be sold. But this business has only sold 3,631. So 3,750 minus 3,631 and 31, 119. Is 119 less than the BEP. Made a loss. The number of units sold is 119 less than the break-even point. The number of units sold, if you look at the question paper, is 3,631 in 2021, when the break-even point for 2021 is 3,700. So this business could not even cover the break-even point, could not even cover the total cost of production. So if you look at that, it's then telling us that 100, we have sold 100 less than 119 units less than the break-even point, and therefore the business has made a loss. And this is now leading us to the last question. The last question. Telo wants to increase profit on jackets by an additional 250,000 in the next financial year. Assuming that the cost structure remains the same, calculate the total number of additional units he must produce to achieve this target. Okay. So let me just use this space here. Let me use this space here. This is question 2.2.8. 2.2.8. The first thing that we need to calculate here is the contribution per unit. Contribution per unit. The contribution per unit, how do you calculate it? It is selling price minus variable cost per unit equals to contribution per unit. Selling price per unit minus variable cost per unit equals to contribution per unit. We want to know the contribution of each unit to our profit. So the selling price here is 1,170. 1,170 is the selling price minus a variable cost per unit. For 2021, the variable cost per unit is 700. Equals to contribution per unit. 1,170 minus 700. 1,170 minus 700. This is giving us the contribution. Each unit contributes 470 to our profit. Each unit contributes 470 to our profit. So if we want to reach a target of an additional 250,000 profit, then it means we need to take this 250,000 and divide it by 470 so that we know the total number of units that we need to produce. Telo wants to increase profits on jacket by additional 250,000 in the next fund. Assuming the cost structure remains the same, calculate the total number of additional units he must produce to achieve his target. Yes. So each unit is contributing 470 into our profits. So if we want to achieve a target of 250, if we want to know the number of units that we need to add, let's divide this 250,000 by 470. 470, which is our contribution per unit. So 250,000. 250,000 divided by 470. This will give you 532 units. It's 531,9. So that is 532 units. So if this owner wants to achieve an additional 250,000 profit in the next financial year, it will mean that he will also have to increase the total number of units produced by 532 units in order to achieve this target. So this now brings us to an end of our question 2. Our question 2 from November 2020, question paper 2. That is question 2, which was based on cost accounting and manufacturing. Perfect manufacturers and leather manufacturers. So our following lesson will still be based on the very same paper, which is paper 2, and we will then be continuing to question 3 and question 4. So thank you very much.